so much, you may even get tired of winning. And you'll say, please, please, it's too much winning.
Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy, Camel. And the markets are just chopping around all over the place at the moment, aren't they? Up and down, and I can see emotions are high. And I can see fear is high, and speculation is high, and toxicity is high. And so before we get into today's episode, I wanted to kind of offer two pieces of friendly advice, okay? It's okay to be emotional from time to time. Anyone that has watched this channel long enough knows from time to time I'm extremely hot-headed, okay? But it is not okay to be emotional in your analysis, in your trading, in your assessments of markets, okay? So since that's what we're going to do now, make an assessment of markets, no matter how you are feeling inside, push that aside for the moment, take a deep breath, take a moment if you have to, okay? But just understand that it's totally fine to be human and have emotions, but it's not at all helpful. We all know that. Even if you're brand new to markets, we all know it's not at all helpful to be a highly emotional creature whilst we're trying to look at charts and stuff. So if you are emotional, take as much time as you need to calm yourself down, take a few breaths, shove it all to one side, and then that will allow us to all kind of just look at what's happening at the moment as objectively as possible. And the second thing I wanted to suggest before we get into today, if you are an investor, this is particularly pertinent, okay? Unless you're a day trader, unless the intraday movements are how you make your living, then do you really need to be watching the charts all manner of hours of the day? I don't think that's helpful, okay? Especially during volatility, especially if you're newer to markets. If you've got your positions and you decided you're not selling, or if you're not going to go short, or you're not a 5-minute candle chart trader, then you don't need to be keeping an eye on the markets every day and feeling great every candle that goes green and feeling sick every time you see a red candle. Okay, for the most part, the markets have actually not moved at all in weeks. And I'm going to show you that. I'm also going to show you that one of the reasons I'm so calm, I know experience is obviously a big factor, but I'm looking at the bond market at the moment, and the bond market is extremely exciting and important. And I think that a lot of the reason people aren't calm at the moment is because they're looking elsewhere. They're not looking at the bond market. So I'm going to show you that. I'm going to show you why I think the bond market is extremely important for all investors and traders at the moment. And remember, it's okay to turn your screen off, okay? If you're not a day trader, then you don't need to look at anything other than the closes. And if you're a long-term investor, then none of this really matters at all. So spend your time doing something, anything, other than sat in a room alone, staring at your phone, watching the price ping around. This tweet right here from Cobra is absolutely perfect. There's nothing funnier at the moment than seeing the bulls and the bears making fun of each other every time a red or a green candle is being made. In reality, this is what we've been doing for the past month. Totally sideways, okay? You can see right here. We've done absolutely nothing. We're at the exact same price that we were in February, no less, okay? All the way back in February, we were trading this exact level. And so this is what I mean about spending your time productively. It is not productive to watch price ping around like this and you feel like a jerk when it's red and you feel like a hero when it's green. Totally unnecessary. If you're newer to markets and you want to study, you want to learn, you want to improve, then by all means, spend that time studying. Spend that time doing something that increases your experience. But don't just spend it looking at your phone, watching the chart and the price ping up and down in a sideways range, because that's not conducive to making you a better trader. It's not going to make you a better investor. It's not going to make you a healthy individual. You're going to just be weathering stress totally unnecessarily. So touch grass, relax, okay? At least wait for a daily close. We'll play that outro music at the end, I think. I wanted to announce this before we get into today's episode. This is at camelfinance.co.uk in the members hub. People for a long time were asking me to put together a Trendline PDF, just like we've got the cycles PDF. They were asking for one on Trendlines. And instead of create a PDF, we just put it on the website and you can go through and learn everything we know about the trend lines, everything I use trend lines for, how to define them, how I correctly draw them. There's all sorts of detail in here, including real world examples and all that kind of thing that we've used on the channel. So go and check that out. By the way, totally free, okay? You can just sign up, use the content, and if you don't like it or you just want to get it for free, then cancel after 2 weeks. Absolutely no cost to you. So if you do want to do something, okay, perhaps do something productive like study, but don't look at that 5-minute candle. And alternatively, just go out, okay? Have a barbecue, sit in the sun, relax, take your mind off things until until the volatility settles down. So anyway, if you do want to use this, it's all free, like I said, camelfinance.co.uk. Let's get some alpha on the table for today, okay? Just so you know, this is actually still not invalidated. It was never invalidated, and this is still the base case until such time as we see invalidation, okay? When I posted this, we were all the way back here at the start of the year. Since then, we did indeed find a weekly cycle low, and since then we have started to bounce off, okay? Not as aggressively as I was expecting, but so far, the invalidation, which is a failed daily cycle for Bitcoin, is yet to show up. So therefore, this is not invalidated yet, and therefore, whilst it's taking slightly longer than expected, yes, it's taken a little longer than I anticipated. It's not quite looking like this or like this just yet, but it's not actually invalidated. It's not doing anything out of the ordinary, and it may well just be the case that we're going to do something like this, okay? A month, another month, and then off we go. So this is still the base case. And again, I can't invalidate it just yet because the price has not met the invalidation conditions. It's also true that this is still in play as well, okay? The price certainly spent more time hanging around in here than I expected it to. But again, if we start to push off any time in the not too distant future, then it would still be considered by me to be within normal expectations. If I come on here and add the yellow squiggle and the fractal back, okay, you can see again, we have splattered around and taken a bit longer in here than I was anticipating. But if it was to occur in the next few sessions, something like this, after the volatility has been weathered and everyone's been liquidated, would it be super different? Not for me personally, right? And here's the key part, we're still holding the cycle lows. So not super different as far as I'm concerned. It's certainly not invalidated. It's just taking a little longer than expected. In fact, whilst we're here, I want to do something else and show you this because this is quite funny to me as well. Notice how absolutely everyone is wrong, okay? Again, it fits in with what Cobra is saying about everyone getting upset with each other and arguing. We had this bearish rising wedge, okay? Then what did we do? We broke down, okay? People will enter shorts, of course, here on the trendline break with a stop somewhere up here or up here. Then in yesterday's candle, we pump up, liquidate all of the stops from the short positions, and then turbo reverse, okay? And now, the funny thing about this is it probably also liquidated a whole heap of people that were trading. I'll get rid of these as well so we can see, delete this. Okay, trading this breakout. So a whole heap of people would have been long here on the breakout because they didn't wait for a daily close with a stop somewhere in here, or where would it be? I don't know, below this low, whatever. And we probably stopped most of those guys out as well. So we've stopped all the shorts out, then we stopped all the longs out, and now we're probably ready to reveal the true direction, which I think is quite funny. Again though, still holding above the invalidation level. All of this, okay, still sideways pretty much. And the worst part about the sideways market is everyone's wrong. Bulls are wrong and bears are wrong because we're just going sideways. As Nesty points out, somewhat deja vu with 2023. Looks an awful lot like that fake out failed cycle, okay? So here's the cycle low from 2023. Here's the fake out failed cycle. Here's the timing based low. And then pump, city came thereafter. And so far, if this is what's repeating, then we had the cycle low, the fake out failed cycle, and we're now in the process of printing that higher low, right? That higher low, timing-based low, getting ready for something like this. So until such time as something changes, right, it's just objectively true. That's what it is. I also want to point out one more thing here before we move off of Bitcoin, I think. And again, that's the relative strength of Bitcoin, right? Bitcoin is holding up extremely well given the volatility in the stock market and the futures. I think I said this a couple of days ago, but it's true. There was a time when the NASDAQ, if it was down 7, 8, 9, 10%, Bitcoin would have been down 20, 25, 30%, right? Bitcoin would have been all the way back down here at 60K. But it's actually holding up extremely well in the face of a stock market sell-off. The relative strength here is absolutely notable. And remember, when we measure it from the cycle low, it is still absolutely smoking everything, okay? It's still majorly outperforming the stocks, which have had record back-to-back years. So hard to be too complainy about this for me personally, especially if we can indeed get a push and start to push to the upside here. And again, remember that double is still on the table because it's not invalidated. If this is one of those weekly cycle lows that resolves in a double, just like every other weekly cycle of this 4-year cycle, and it did pop from here to about 150 plus K, okay, it wouldn't be anything outside of what's just been occurring over and over again every 6 months for Bitcoin. Also, one more thing to point out, I guess, keep saying one more, but all of these are really important factors, right? This is why I'm able to stay so calm. If I now put this on a weekly time frame, look what happens here, okay? We get the weekly cycle low in blue. 1, 2 106-day arrows. This 106 days pinned on the lowest low. 1, 2 106-day counts gives us a weekly cycle low. 1, 2 106-day counts gives us a weekly cycle low. 1, 2 gives us the weekly cycle low. 1, 2 106-day counts puts us right around here. Now, it does have a plus or minus 1 week wiggle room for the 106-day count, okay? But fast forward 1 week, the low is probably already in here. This is why I think the low is in. This is why I think the people calling for one final low and go are wrong, because if it is, then it will break this 106-day cycle. We'll end up with some kind of weird inversion into this 106-day cycle, and then the whole thing will be out of sync. So I don't think that's coming, okay? It's not impossible. It certainly is a possibility, but based on how symmetrical this is at the moment, based on how the rhythm of the market has been extremely consistent, I don't see any reason to start to doubt that that's going to change right now. If the market shows us something new, we can then say, okay, it showed us something new. But right now, why would you doubt this? It just doesn't make sense to me, especially given the relative strength that Bitcoin is showing. So anyway, that's Bitcoin, okay? Hard for me to say anything other than the thing's holding up like a champ, okay? I'm actually really proud of what I'm seeing from Bitcoin right here in terms of its relative strength. The next thing, of course, we've got to talk about, and then we'll do some charts at the end, as always, is this whole tariff thing is a super duper uber manipulative game, right? Now, I'm not one for pointing at manipulation and throwing my toys out of the pram. I just accept that all markets are manipulated, and I don't really care outside of that, right? We all know they're manipulated. Who cares, right? Game's the game. But I do think, even after all the time I've been doing this, it still never ceases to amaze me how insane some of this stuff is, just the way it operates in plain sight, right? We've had all this tariff fear, all of this downside in the stocks, all of this doom and gloom. Then hours before DT speaks on the tariffs and announces what the tariffs really are, we get all of this, seemingly undoing all of the tariff concerns, right? We've seen Mexican president saying that they're not going to impose tit-for-tat tariffs on the US, Canada saying they're going to remove the tariffs if the US does, and markets rally strongly. Everyone's thinking to themselves, wait, all of that was a nothing burger, right? Then Trump comes out and, of course, slaps tariffs on absolutely everything. We've now got the average tariff rate all the way back up here, which echoes the Great Depression and the one 100 years prior to that, which, by the way, was another Great Depression. And the markets are having what I'm terming a tariff tantrum at the moment, with many, many people suggesting that the top is in and the bear market's begun and we're going into a Great Depression right now. This guy right here is claiming that all you have to do is take the deficit that the US has with any particular country and divide it by the country's export to the US, and you get the percentage of tariffs that have been applied. So I'll be honest, full disclosure, I didn't check the calculations because frankly I don't care, right? I really don't care. I don't think any of this actually matters. And I think that the people that are very emotional about this are just emotional babies, to tell you the truth. Remember this, right? Markets have short memories. Camels do not. It was only a couple of weeks ago that people were telling me tariffs were inflationary, right? And now all of a sudden they're kicking and screaming and telling you the Great Depression 2.0 is coming because tariffs are now deflationary, right? It's and so these people don't have any credibility. The things they say don't matter, right? Their words don't carry any weight. And if they didn't know what they were talking about before, why do they suddenly know what they're talking about now, right? Of course they don't, okay? So I don't care about tariffs. I'm not going to go through and check the calculations, but I did think it's pretty funny that it seems to be just like an arbitrary exercise, if true. I'll tell you what I do care about, though, and why I am focused on the bond market, as I said earlier, and why I believe everyone else should be focused on the bond market. The interest rates in the bond market are declining. This right here is the 10-year yield. Look at that, fresh lows. The 10-year yield, the chart of truth, making fresh lows. After what? A perfect rejection at resistance, as we were suggesting would happen on this channel. Why is this important? Okay, because this is tell that to the bond market. Here's the 2-year yield, again, following the tell that to the bond market squiggle. Now, what does tell that to the bond market mean? When the Fed comes out and says it is going to remain overly restrictive, when the Fed says it's going to remain paused at May's meeting, we on this channel say tell that to the bond market, okay? We say tell that to the flipping bond market. Why? Because the Fed does not get a choice at where the interest rates sit. Contrary to popular belief, people think that the Fed is in charge of this right here. They think the Fed can decide whether or not to cut or raise rates. The Fed has no control over this. Neither does DT. And I know there's a popular conspiracy theory out there at the moment that DT's crashing the markets because he wants the interest rates down. Okay, but the reality is, I say it to you again, it doesn't matter what your opinion is. Tell that to the bond market, because it is the bond market in aggregate that gets to decide what happens to the interest rates. And the more that this follows the yellow squiggle to the downside, the sooner we are going to see the rates repriced and we are going to see cuts put on the table for May's meeting. We're certainly not getting out of June's meeting without seeing rate cuts, particularly if this head and shoulders pattern is about to complete and meet its measured move target, which is down towards 3%. So again, remember, it doesn't matter what anyone's opinion is. It doesn't matter what my opinion is. It doesn't matter what anyone thinks, says, or does. What matters is what the bond market in aggregate is deciding the interest rates will be. That is the real alpha. That is why I'm able to stay calm here. And that is why all the crazies in the equity futures, okay, all of that stuff is irrelevant. The fact that Bitcoin is bouncing around up and down like a yo-yo is irrelevant. What really matters is the credit markets, and the US 10-year has completed a head and shoulders breakout now and is heading down towards sub 3%. So that tells us the rate cuts are coming, okay? And we can blame it on DT crashing the markets, we can blame it on whatever you want, but the reality is it's the bond market that has now decided in aggregate it is time to force the Fed to cut the rates. And it is these rate cuts coming as early as next month in the May's meeting that are going to be conducive to the final blow-off top rally into the top. So the question really is simple. Can you weather the storm, or are you going to continue to get really wound up, get really upset, be infighting and wasting your time? Are you going to keep wasting your time checking the price every day? I'm also seeing a whole heap of comments from people saying, Camel, are you stopped out? Camel, are you stopped out? Okay, look, what do you think I do all day? You think I just sit there watching the level to see if it gets run? Okay, like, do you know, what's the point of being a trader if all my time is going to be occupied staring at a 5-minute candle to see if my stop loss level is run? The stop loss level is made public, okay? It's given to members the precise level in real time. You can also see it on the side of the chart, as I've shown countless times before, okay? There it is, okay? The moment that level is traded, the price is stopped out. Sometimes I don't know for days after the fact, okay? Because I have a real life. I'm not sat here waiting to see if the stop loss level is run, okay? And I don't know why you would want to waste your time doing that, okay? So the stop loss levels are there for everyone to see, so they can't possibly be cheated because we actually are a trader for a living, unlike most of these YouTubers that do not trade. And so why are you sat here asking me if the stop loss is run, right? Why are you watching the price trade into the stop? The moment the level's traded, it's done. I don't need to watch it, right? Neither do you. So again, go outside, touch grass, at least wait for a daily close. I can't wait to listen to this song. Let's get through the last couple of slides whilst we wait for all this equity mess to sort itself out, right? Once people are liquidated, once people have fully capitulated and quit and given up, the run that will follow will be spectacular. And the horrible truth is very, very few people are going to get to profit from that because nobody here is buying the dip. Almost no one is chucking money at this market because this is the final run to the top on the rate cuts that are about to start to follow, right? Nobody is ready for this because no one's looking in the right places. Everyone's just too busy infighting over a totally sideways range-bound crypto market. I've added a whole heap here in the members section. We've added semiconductors, we've added Russell 2K exposure, all sorts of stuff. Okay, and that's for a simple reason that the bond market is about to force the Fed to cut rates. When the rate cuts come, we're going to get a blow off top to new all-time highs. And then what you're going to see is, again, a highly contrarian trade because I'm going to exit the market before everyone else even gets a chance to think about it, right? I'm going to be selling as everyone's going, why are you selling now, bro? This bull market's just got started, okay? So the only way you capture that is to actually be opposite the herd right now. Focus on the bigger picture, okay? Push the emotions aside. And also celebrate Bitcoin's relative strength because these are rare times, okay? Bitcoin has not shown relative strength like this, frankly, ever in its life. Not that I can remember anyway. I've been doing crypto for 8 years. I've been trading markets for double that. And I can't remember a single day when Bitcoin was holding up this well against stock market futures that were tanking. So pay attention, right? Also pay attention because I know a lot of people are saying things like, Camel, it's not contrarian to be long here. Camel, it's not contrarian to be buying the dip. Actually, my brother, yes, it is. How do we know? Because we are now at 61.9% across the AAII bearish index. Okay, this is the highest level since March 2009. Bear market lows. Okay, so don't tell me it's not contrarian to be adding dips here. Okay, I was adding dips because it is highly contrarian, and that is my nature. We're not going to have another one of these rants. Okay, what else is there to say? Okay, I'm gonna keep doing me. If the levels run, then of course, as always, we'll come back and we'll discuss it. In the meantime, Bitcoin holding like a champ. Where's my position gone? Give me my position back. There it is. Okay, so bear market. I don't think so. I don't believe it. Not just yet. We'll see. Okay, again, we'll let the stop do the worrying. Dixie looks like it is completing its downside move into that weekly cycle low. Now remember, some time ago, what we used to think was normal was Dixie down, risk up, okay? And we also used to expect the inverse to be true, meaning Dixie up, risk down. However, all of this neighborhood really has been Dixie goes where risk goes, okay? Meaning if Bitcoin goes up, Dixie's going up at the same time. And when Dixie's going down, Bitcoin's going down. Same deal for the stocks, right? Stocks up, Dixie up. Everything seems to be no longer operating in an inverse relationship now. Now what we've got at the moment, at least for this period of time in here, where my insane yellow squiggles are going on, all of this has shown pretty much a standard one-to-one correlation, okay, rather than an inverse correlation. So what can we take away from this? Well, as expected, perfect timing window. We are getting that undercut, as per my yellow squiggle, into a daily and a weekly cycle low. Okay, this should turn around and confirm by breaking trendline any day now. And when it does, we're probably going to see risk move higher. Now, the big question thereafter is, does this resolve to a more deflationary type look? Does this start to push significantly to the upside here, as per my yellow squiggles? Or do the rest of these yellow squiggles get invalidated? Is what we see here a counter trend bounce to a lower high and a rollover, and then is it during that lower high and rollover that we actually go back to being inverse correlated? Is this rollover and die in the Dixie actually catalyzed by things like euro and yen and GBP strength, which I think it will be? And if that's the case, we will indeed see that final push to all-time highs again, which will look an awful lot like the base case hypothesis on the channel. And again, you will see me, unfortunately, be even more insufferable than I'm being now, because I will come back here and tell you that the Camel Crew, the level 3 members, all caught a whole heap of profits in semis and the Russell 2K and all the crypto stocks that we were buying down here, because indeed it was a highly contrarian trade. The only way we can make money on this bounce is if we are actually buying the dip here. And when we look around, okay, nothing has really changed. Absolutely nothing. We're still saying the same things. We're still operating with the same base cases, and we're still yet to see any clear invalidations. Of course, start to see them, and we can react and adapt to that. I'm hoping that this is the top for gold, and gold's going to head towards a daily cycle low. Certainly looks like silver is playing ball. Clicked on the wrong thing there. Looks like silver is going to head into a daily cycle low, and then we're probably going to add another set of positions, move stops up once more, and look to sell into the top of the weekly cycle before we get a more significant decline. Other than that, look, tell it to the bond market, okay? This is what matters. This is where your focus should be. I want to end by saying if you made it this far, then maybe you want to continue to study the trendline strategy. Maybe you want to go to camelfinance.co.uk and try this thing out for 2 weeks. Even if you don't like it, just cancel. It will cost you nothing. And for the 2 weeks, of course, you can get access to the Camel Finance indicator. Okay, that will get sent to your TradingView account, and it will pick the cycle lows on any asset on any time frame, so you can play around with that and see what you think. For now, at least, it agrees the low is in for Bitcoin and is looking for upside. So we'll see. Anyway, camelfinance.co.uk, try it out. You won't be disappointed, I assure you. There's also a whole Discord clone and a whole heap of other cool stuff. So have a good click around and see what you can find. I'm your boy Camel. I hope you're doing well in life. Until next time, touch grass, at least wait for a daily close. Peace.
Touch grass, relax, at least wait for a daily close. Keep your marbles intact, appreciate the cycle lows. Manage your risks, set stocks, let time just do the rest. Meanwhile, look forward to another Camel Finance episode.